A lot of traders are about to fall for an absolutely brutal trap. I hope that you're watching this in time so you're not one of the victims. In this video, I'll be breaking down all the major macroeconomic events of the upcoming week, of course, the stats, facts, and figures of the upcoming seasonality, but most importantly, I want to talk about what's going on in the world of options and option structure because there's very clearly a trap being laid. I want to talk about how to identify it, how to avoid it, and most important, how to make some money off of it. Of course, if you like these types of market breakdowns, don't forget to like, comment, subscribe, all that good jazz, because it does help get this video in front of other people who might be able to benefit off of it. But with that being said, let's rock. We are currently gearing up to go into the most pivotal trading week of this entire sell-off. So to better understand where we're most likely going, the high odds type of pathways, you have to better understand where we're coming from. To close out the most recent trading week, here is the official headline. Dow pops more than 650 points in relief bounce Friday, but still posts worst week since 2023. This bounce, definitely impressive. Here's a heat map of the S&P 500 as whole green as could possibly be, and if you look at the overall market, putting up some impressive numbers. The SPY gaining over 2%, the Nasdaq almost 2.5%, you have the VIX crumbling almost 12%, and a lot of our favorite tech plays, a lot of the most popular retail plays, very, very much in the green. I mean, look at this, Palantir up 8.3%, Tesla up 3.9%, you have Nvidia up 5%, you have MSTR up a crazy 13%. There was a lot of money to be made to the bullish direction on Friday, and the real reason for that was the uncertainty related to the government shutdown. Well, that uncertainty was removed from the system. Senate passes GOP funding bill to avert a government shutdown. First passed the House, went to the Senate, then went to the president. So that uncertainty taking out of the system. But with that being said, even though Friday was a nice green day, and hey, I hope you got your attendees, the overall week, as the official headline really alluded to, kind of brutal. Overall, the S&P 500 dropped 2.28%, the Nasdaq 2.47%, the small cap sector down 1.5%, and even Bitcoin was down 3%. So yes, it was a green Friday, but the overall week still pretty brutal. And the reason that even though we had the green Friday, but the pressure is still clearly down and the bears are still in control, it all relates to the tariffs, the trade war, the drug war, whatever you want to call it, but it's more of prices are going up. See you in 4 years. Canada flexes economic muscle as tariff negotiations continue. This has been clearly the major story, the major trend that's causing the market to go down is all the uncertainty related to what in the world is going on with this trade war. Most recently, Canada is clapping back. Canadians are swapping their friendly auras for a fierce sense of nationalism amid the US President Donald Trump's attacks on the country's trade and sovereignty. Trump's mostly delayed plans for the 25% tariffs and his calls for the country to become an American state has spurned citizens of the U.S. northern neighbor and key trade partner. As a result, Canadians have rejected American imports and issued other economic punishments in an unusual show of patriotism. This is the point that I truly want to get your opinions on. It really feels for most Canadians like we've been backstabbed, that the person that we trusted the most is now sort of turning on us and attacking us for no apparent reason. That has really unified the people. This is my direct question to all of you, and I don't mean this rhetorically. I truly want to get your thoughts in a comment. This concept of, getting stabbed in the back. If you looked at the tariff situation before Trump started doing what he's currently doing, it was clearly unfair to Americans. Canada was tariffing the US more on a proportionate rate. Just look it up. This isn't debated information. This isn't hidden information. It's information that's not difficult to find. So this concept of, it just came out of nowhere. It's unfair. What are you talking about? For years and years and years, the US was getting the short end of the stick when it came to trade. And the fact that, and I get it, this isn't happening really with the best bedside manner, but just if we're looking at purely just the numbers, I'm a bit confused. And maybe I'm missing something, and that's why I'm saying, hey, let me know your thoughts in a comment. Anyway, this is the major thing that's been causing the market to sell off for weeks. Trump tariff threats are pushing Canada's largest oil producer to break its dependence on the US. The Alberta Premier said the province wants to support Donald Trump's energy agenda and helps the U.S. win the AI race with China. So trying to play nice, but also saying that she's going to start looking for other customers. But Smith warned Alberta is looking for customers beyond the U.S. in Asia and Europe as Trump's tariff threats cause uncertainty. Alberta is Canada's largest oil producer and supplies the overwhelming majority of the country's oil exports to the U.S. So in the short term, you're seeing a lot of uncertainty, and depending on, I suppose, what side of the border you're on, probably really solidifies your opinion, if you will, of who you think is right, of who you think is wrong. So I just wanted to share that, but kind of circling back to the whole delayed thing every single day. This is an on again, off again thing of we're coming in on steel and aluminum at 25%. At one point in that day, it was 50%, back down to 25%. I know I've said the word uncertainty already 800 times in this video alone, but that's exactly what's going on. And that's exactly what the market doesn't hate, because it's prompting a bit more chaos. I know that you know this story and why the market isn't liking it, but it is very, very important to understand the short-term stock movement, especially when I'm about to overlay what's happening in the world of options and also the other macroeconomic events. So throughout the month of March, lots of uncertainty, but the next major date you really need to know is April 2nd. That is when the reciprocal tariffs are going to be going into effect. So please pay attention to that, and that's going to be important as we understand better what's going on this week. Fed Chair Powell, aka Daddy Powell, is about to take the stage once again. It is an FOMC week. The Federal Open Market Committee meeting is going down this week on Wednesday. We're going to find out what's going on with the Fed fund rate. I want to talk about that, but just so you know, retail sales Monday, tomorrow morning before the market opens. We get CPI out of the Eurozone. The big thing is the FOMC. That's going down Wednesday. And then Thursday, the normal initial jobless claims. So in terms of these major macroeconomic events, yes, pay attention to retail sales, but the most important one of the week as of now that's at least scheduled is the Fed interest rate decision. We are currently sitting at 4.25%. That is the Fed fund rate. Coming into Wednesday, March 19th at 2 p.m. Eastern, when we get the results, there's currently a 98% chance that it's going to stay at 4.25%. As in, the market is very, very sure nothing is going to be happening with the Fed fund rate. So when people are making their predictions that nothing's going to happen, folks, we already know this. We can see where the money's betting on the market. 98% chance nothing's going to happen. But what I find interesting here is if you fast forward to the May meeting, still a pretty good chance we're not getting a Fed fund rate. But as of this moment, as of the moment that I'm filming this video, the mid-June meeting, June 18th, there's actually better odds than not that we're finally going to be getting a rate cut at that point. So I just wanted to share all of that information of how the Fed's really shaping up. But then really circling back to what pay attention to this Wednesday, we know that we're not going to get a change to the rate, and that comes out at 2. So really what's going to be moving the market, and really what's going to be moving the market, is Jerome Powell's press conference at 2:30, where all the reporters in the land are going to be saying, are you talking to Trump? Are you feeling dovish? Are you feeling hawkish? Are you guys working together? Are you working against each other? And they're going to ask him a gazillion and a half questions of how he believes these potential tariffs are going to be impacting the overall economy and thus what they have to do for monetary policy. So it is that conversation at 2:30 that is very much the flip of a coin. Will it be bullish? Will it be bearish? Your guess is as good as mine. All I can tell you is Godspeed. You also need to know that on Wednesday, the exact same day, that is the day that volatility contracts will be expiring. So we have a VIX OPEX. And then on Friday itself, that is not only a monthly OPEX, this upcoming Friday, the 21st, it is a quarterly OPEX, aka quadruple witching. So there's going to be a lot of pent up volatility in the system. So that's going to get crazy, but you should also be overlaying this on the concept of seasonality. Very quickly, you should know that the end of March typically does favor the bulls over the past 3 decades. Over the past 5 years, you could see the month of March itself is slightly green. If you go to the weekly, it's really the final week that becomes very bullish. It's kind of the first week of April. We're at this point. And once again, this is now just 5 years worth of data. So just wanted to share that. If you're looking for the individual days, I do put this in the newsletter. Monday, a bit more neutral. Tuesday, very bullish. Wednesday, a bit more neutral. Thursday, slightly bullish. And then Friday, a bit more neutral. So that's the breakdown per day. Remember, seasonality isn't the end all be all, but it does give you a good idea of the tailwinds and the headwinds of what's going on. So I just wanted to share that. But most importantly, I want to talk about the trap. So now that you have a better backdrop of how we got to where we currently are, I think we could better understand and have a more fruitful conversation of why there's a giant trap being laid. After such a relentless market correction, the relief rally faces a high burden of proof, which is a fancy schmancy way of saying all the talking heads on lamestream media don't know what's going on. So I think it's whenever that happens, it's better to dive into the actual quantifiable numbers of what is truly happening. Here's a look at the daily chart of the S&P 500 index, the actual SPX. And as of 2 closes ago, we were officially in correction territory, down more than 10%. But then we had a nice relief bounce on Friday related to some of the tensions with the ceasefire of like Ukraine and Russia, those tensions coming down, obviously US political tensions of the government shutdown coming down, and then also we didn't get any negative updates, we didn't get any additional negative updates related to tariffs, all allowing us for a little bit of a bounce. And now the golden question is this the bottom? Are we about to bounce? Should this dip be bought, or is this a fake out? I see this all over the internet. Everyone is calling this the bottom, and that is the trap. I deeply, deeply believe that the highest probability pathway out of this is that we have one more flush before we see the actual bottom here. So I think what's going to happen is people are going to say, oh, Friday is actually looking pretty good. All right, interesting. And the trap's being laid for a bullish start to the week. If you look at Monday, Tuesday, Wednesday, Thursday, just the first 4 days, you're going to look at the option chain and you're going to realize that it's call dominated, and you're going to realize that it's positive gamma. So stability is coming to the system. And actually you could see that in the fact that the vol of the S&P 500 is starting to come down. Remember, I'm talking about the first 4 days, Monday, Tuesday, Wednesday, Thursday. It is now call dominated. For the longest time, every single day was put dominated. So a little bit more bullish aggression coming in. We see vols dropping. That is another pretty decent sign that the bulls are getting the upper hand. And I've made many videos on this. These are all the important ingredients for a Vanna rally. If you don't know what that is, it's just we're in this unique situation where we get these pretty crazy bear market rallies, and things are setting up for that. I think that we're going to see early week optimism, early week bullishness. And when people start us to see taking out recent highs, they're going to say, okay, that's the dip, time to buy. And what they don't realize is that ends on Friday. That ends on the monthly OPEX, quadruple witching. If you take out Monday, Tuesday, Wednesday, Thursday, and just focus on Friday, you're going to realize that not only is it put dominated, not only is it negative gamma, but the size of the puts and the size of the negative gamma is a multitude larger than all of whatever's going on Monday, Tuesday, Wednesday, Thursday. So what we really have going on here is that trap being laid via the options market, that we're going to get a fake amount of optimism early in the week, and then man, oh man, something wicked this way comes on Friday. So I just want everyone to be careful. I'm not telling you to not be bullish. I'm just saying if you're going to be bullish, make sure it's very, very short term, because Friday, something is loaded in the chamber that could be brutal. And I also want to remind you, not this Friday, but next Friday, the end of the month, March 31st, that's when the JP Morgan position, their put collar, which is around 5565, I want to call out, is the strike of the put side of their collar. That's still in the system up until next Friday. So as I've made many videos on this, I do believe that there's a trap being laid here. I tweeted it out. I think we're going to get a dead cat bounce. I think a lot of people are going to get suckered into this play right now. And obviously, depending on your time frame, you could play all of these directions. I just want to let you know that out of the world of all probabilities, and of course, I'm not saying this with certainty, every single pathway has a certain probability assigned to it. I believe as of right now that the highest probability pathway is a push to the upside early this week. That gets faded to the end of this week, potentially the end of March. And then really that's the bottom that we're going to want to be playing off of, at least what I'm looking to be playing off of. Somewhere of truly late March, early April, I believe that's where the real bottom is going to be put in. And I also want to call out that I think all of April is going to be crazy, crazy bullish. And just to throw a little bit of food for thought here of why things might not be the perfect time to go long right now, I do want to remind you that when the market closed on Friday, gold was at another new all-time high. So clearly there is a flight to safety. I get that vol's calming down. I get that we have a little bit of a bottoming structure here, but based on what I'm seeing in the options market and based on what I'm seeing big money moving to flight to safety, I think there's still some legitimate concern, which is why, okay, super short term, if you want to be bullish, whatever, respect your risk, and maybe you could find a little bit of a trend. I do believe it's very real for the S&P 500 to get up to 5,700, 5,750. I think that's a very, very real shot in this dead cat bounce. So I will be playing it if I see a good low risk opportunity to get in, but I'm not going to be married to it because of what in the world is going down at the end of this week and also at the end of the month. So I just want to call that out. If you're curious as of right now for the whole option chain, what all the key levels levels are, it's pretty much every 50 point increment. So around 5,650, 5,700, 5,750. And also that's true to the downside. So if you want the rough SPY levels for that, that's basically every $5 is going to be a major level. So expect big ranges. I do expect the bulls to dominate early this week. I expect it to be a fake out. I expect it to be a trap. I don't want any of you guys to get caught up in it. Of course, as things play out throughout the week, every single day, Monday to Friday, 9 to 11, I will be doing a pre-market and a trading show where I lay out all the levels for you. So make sure you're checking that out. I'll update everyone of what's happening in the option chain, but there's a lot going on right now. So I just wanted you guys to know not only all the major macroeconomic events, the seasonality, but what's going on in the option chain, because a brutal trap is being laid. That's what I have for you. Of course, if you have any questions, comments, concerns, let me know in a comment below. Always happy to talk with all of you guys, and of course, clarify anything if I prompt a little bit of confusion. But that's what I have for you. I appreciate the good vibes. I appreciate your time. I'll catch you in the next one.